Okay. So when it comes to these tax rates, there's a standard tax rates. There's a standard tax rate for companies. On taxable income of a company, the standard rate is to 24%. So that is up to 30th November 2022. Next one, you have such part of the gains and profits of a company for a year of assessment from following specific businesses. Now, as you can see here, apart from the standard tax rate of 24%, we have these specific businesses. For these specific businesses, the applicable tax rate would be 14%. Now, that is like a concessionary tax rate. Normal tax rate is 24, this is 14%. Now, what are these specific businesses? We can take small and medium enterprises. As we all know, we call it SMEs, small and medium enterprises. And then businesses involved in exporting goods, export-oriented businesses. And then specified undertakings. There are some specified undertakings, VVC, and educational institutions, organizations or entities involved in education services. And then businesses involved in promotion of tourism. If a business is involved in promoting Sri Lankan tourism, then promotion of tourism. And then construction companies providing construction services, agro-processing, businesses involved in agriculture, and healthcare services. And this one, dividends received from a resident company. If you receive dividends from a resident company, that gain will be taxed at a rate of 14%, not the standard rate of 24%. And providing health protective equipment and similar products supplied to the Ministry of Health, Department of Health Services, Sri Lanka Army, Sri Lanka Navy, Sri Lanka Air Force, Sri Lanka Police, and COVID Center by any export company which is registered with the Board of Investments of Sri Lanka. So basically, providing health protective equipment to these organizations, these institutions, basically the government. So these are taxed at a rate of, these organizations are taxed at a rate of 14%. And next one, gem and jewelry businesses. Businesses involved in gem and jewelry businesses. And from the supply of electricity to national grid generated using renewable energy resources. So all these are coming under these specific business entities, specific businesses. Okay. Moving on. Next one. Now, I told you the standard rate is 24%, and there are some specific businesses like these. These will be taxed at a rate of 14%. Apart from that, on gains and profits from manufacturing. Now, if it is a manufacturing business organization, the applicable tax rate would be 18%, not 24%, not 14%, but 18%. Now you need to remember, if it is a manufacturing company, 18%. But be careful, these rates are applicable up to 30th November 2022. Next one, part 4, on gains and profits from conducting betting and gaming. If there are any business organization conducting business activities in relation to betting and gaming, those entities will be taxed at a rate of 40%, a higher tax rate, 40%. Not only that, the same rate will be applicable here as well on gains and profits from manufacture and sale or import and sale of any liquor or tobacco products. If you manufacture or sale, or you import and sale liquor and tobacco products, the applicable rate would be 40%. Now I discussed 24%, that is the standard rate, 14% for these specific businesses, and then 18% for manufacturing businesses, 40% for betting, gaming, liquor, and tobacco. These are the normal company taxation rates applicable up to 30th November 2022. Next one, some important 2 points. We'll just see what is included in these things. 50% reduction in aggregate income tax payable. When it comes to aggregate income tax payable, after the computation, you get a aggregate income tax payable amount. There's a 50% reduction. 50% reduction in that income tax payable by any company, including BOI companies, which lists its shares on or after 1st January 2021, but prior to 31st December 2021 in the Colombo Stock Exchange. එතකොට ළමයි Colombo Stock Exchange එකේ මේ companies register කරොත් අපි ඒ shares list කරොත් on or after the 1st January 2021 or prior to 31st December 2021, a period එක ඇතුලේ, during that period, if you list your shares in Colombo Stock Exchange, that company will get this 50% reduction in income tax payable. So those are some important aspects to remember. But remember, these are up to 30th November 2022. Next point, it says a similar one, 25% reduction of income tax payable on gains and profits from dividends by any multinational company. If you get dividends from any multinational company, there would be a 25% reduction in income tax payable, subject to the condition of, what is that condition? Condition of increasing exports. What is the condition? Condition of increasing exports, other than the specified undertakings. So we will see what are those specified undertakings in few minutes. So increasing exports by third party, by 30% in the year of assessment commencing from April 1st, 2021, compared to the immediately preceding year of assessment. So those important points are there, but most probably up to those are applicable up to 30th November 2022. Okay, so for your understanding, for your knowledge, you can remember like these points are available when it comes to taxation, company taxation rates. Okay, with that, we'll move on to the new tax rates. This is the important part. So as per the Inland Revenue Bill, these are the new tax rates applicable. Now you can see what is the standard tax rate. The standard tax rate would be 30%. So that is a standard rate for all companies. That is a standard rate. But there's another tax rate. What is that? We discussed that previously as well. On gains and profits from conducting betting and gaming. Previously also we had the same. We were taxing betting and gaming at a rate of 40%. That is there. There are no changes to this 40% rate applicable for betting and gaming. Not only that, on gains and profits from manufacture and sale or import and sale. You manufacture or sell, or you import and sale of liquor or tobacco products. Those are taxed at a rate of 40%. So there are no changes to this 40%, but all other rates will not be applicable. There will be a standard tax rate of 30%. Now, from 1st December 2022 onwards, there will be two tax rates. What are those? Standard tax rate of 30% and these betting, gaming, liquor and tobacco products, those will be taxed at a rate of 40%. So you need to remember now. Now, the concessionary tax rates, we were talking about 14% for those specific businesses. Those are not there, will not be applicable with effect from 1st December 2022. Not only that, that 18%, if you can remember, I told you 18% will be applicable for manufacturing entities. That is also not there. So both 14% and 18% tax rates will not be applicable. There will be only two tax rates from 1st December 2022, 30% and 40%. Okay. Moving on, this one is also important. Now, where a company's taxable income. Now, for individual taxation, you know how to compute the taxable income. For companies also, we will be computing taxable income. Where a company's taxable income includes gains from the realization of investment assets. Basically, you call them capital gains. If you have capital gains in a company, then those gains are taxed to the company at the rate of 10%. But remember, up to 30th November 2022, this is the old rate. Up to 30th November 2022, those capital gains will be taxed at a rate of 10%. Okay, that is the old tax rate. And only the remainder of the company's taxable income. Harvinder, please mute. Okay. Okay. So only the remainder of the company's taxable income are taxed at the rate referred above. Rate referred above means we discuss some rates now. So if you have taxable income, you are taking these capital gains out and taxing these capital gains at a rate of 10%. All other taxable income will be taxed at the applicable tax rate. It can be a 24% previous standard tax rate, or it can be 18%, or it can be 14%. But only this capital gain portion will be taxed at a rate of 10%. Remember, this is up to 30th November 2022. Okay, now what is the new tax rate applicable? What is the new one? As per the new Inland Revenue Bill, the new tax rate, new capital gain tax rate would be 30%. 30%. So there are no any changes between the standard company tax rate and the capital gain tax now. All are taxed at 30%. So there are no changes. As previously, you had to take out capital gains separately and apply 10% and the remainder at the applicable tax rate. Now, there are no breakdowns as such. You need to apply 30% to all taxable income. Okay, so these are the tax rates, changes in tax rates. Remember, you need to be very careful when you are answering the questions. You need to see the year of assessment, the time period, and everything, why the tax rates are different. The cutoff is 30th November 2022. Okay, so moving on, now we discussed there are some specific businesses. No, there are some specific businesses. What is the tax rate? Applicable tax rate would be 14% as per the old tax rates, 14%. So I told you there are some classifications. What are those classifications? We were talking about small and medium enterprises, export businesses, agriculture businesses, education businesses, and businesses who are promoting tourism and information technology services, IT service providing businesses. So we'll discuss a bit about these interpretations and definitions. So those will be important for you to understand what is included in those classifications. Now the first one, small and medium enterprise. Now basically, what is this small and medium enterprise? A person who satisfies the following conditions can be taken as a small and a medium enterprise. So how many conditions are there? There are 3 conditions. The first condition, the person who conducts business solely in Sri Lanka. That entity should conduct business solely in Sri Lanka. If it is so, if that's the case, one condition is satisfied. All conditions would be satisfied, that one condition is satisfied. Other than an individual who is engaged in providing professional services individually or in partnership, being an individual who is professionally qualified. So other than these categories, the person who conducts business solely in Sri Lanka. Next one, the person does not have an associate, that is an entity. So these entities, these small and medium enterprises cannot have these associates. Person does not have an associate. That is the second condition. Third condition, the person's annual gross turnover is less than 500 million. So the revenue, the gross turnover should be less than 500 million in order to be qualified as a small and medium enterprise. Now we'll see in our question also there are some decisions to be made. We'll see. Remember these 3 conditions if it is a small and a medium enterprise. Okay, next one. Now we told what are these specified undertakings. What do you mean by specified undertakings? The first one, entrepot trade involving import, minor processing and re-export. There are some business organizations where they import, they import goods and they do minor processing and then again re-export. If there's a business like this conducting these business activities, it can be taken as a specified undertaking. A business importing goods, do minor processing and then re-export. That is a specified undertaking. Second one, offshore business where goods can be procured from one country. Goods are procured, purchased from one country or manufactured in one country and shipped to another country without bringing the same into Sri Lanka. Goods are not brought into Sri Lanka. They are procuring from one country or manufacturing from one country and then shipped to another country. Goods are not coming to Sri Lanka. Those are offshore businesses. Those are categorized as specified undertakings. And then providing front-end services to client abroad. So if that's the case, that is also a specified undertaking. Headquarters operations of leading buyers for management of financial supply chain and billing operations. So I'll be reading those things because you can read and understand most of these things. And logistic services such as bonded warehouse. What do you mean by a bonded warehouse? That is a warehouse basically. You can stock your goods which are liable for those import duties or VATs. So when you store those goods in the warehouse, the payment can be deferred until you remove the goods from the warehouse. You don't have to pay those taxes, import duties and VATs. So bonded warehouse services are there. Logistic services such as bonded warehouse or multi-country consolidation in Sri Lanka. And then transshipment operations. Transshipment operations. From one ship, you unload goods and then the same good will be loaded to another ship. Transshipment operations until the journey ends. So those operations, those services providing entities will be taken as specified undertakings. Next one, business organizations involved in freight forwarding. All these shipping, everything, air, highway shipping, everything, freight forwarding. Those are specified undertakings. And next one, supply of services to any exporter of goods or services. Your company is supplying services to any exporter of goods or service or to any foreign principal of such exporter directly, being services which could be treated as essentially related to the manufacture of such goods or provision of such services exported by such exporter, either directly or through any export trading house. So basically, you are supplying services to any exporter. It can be goods or services. You are supplying services to them, including any service provided by an agent of a ship operator to such agents foreign principal, and the payment for such services are made by such exporter or foreign principal to such person in Sri Lanka in foreign currency. So there are a lot of things going on in this sentence, in this definition. But basically you can remember supply of services to any exporter of goods or services. And then production or manufacture and supply to an exporter of non-traditional goods. The performance of any service of ship repair, ship breaking repair, and refurbishment of marine cargo containers, provision of computer software, computer programs, computer systems, or recording computer data, or such other services as may be specified by the minister by notice published in the Gazette for payment on foreign currency. Remember, for payment on foreign currency. Those will be specified undertakings. And sale for foreign currency of any gem or jewelry, being a sale made in Sri Lanka by any person authorized by the Central Bank of Sri Lanka to accept payment for such sale in foreign currency. So all these transactions are happened in foreign currency. All these are specified undertakings. But remember, now we don't have these specified undertakings as per the new bill, because we don't classify business organizations into specified undertakings or educational providing services or SMEs. We have a flat rate of 30%. Next one, agricultural businesses. Businesses of producing agricultural, horticultural, or any animal produce, and includes an undertaking for the purpose of rearing livestock or poultry. Now, if a business organization is involved in those things, doing agriculture or doing horticulture or any animal produce or rearing livestock or poultry, all these businesses will be taken as agricultural businesses. What would be the tax rate applicable as per the oil rates? That will be 14%. Next one, when it comes to these educational services, the Act, Indian Revenue Act has not defined what is meant by an educational services. So there can be questions, but in the question it will be mentioned as educational service providing, then the tax rate would be 14%, specific business. Next one, promoting tourism, undertakings which promote tourism. Any hotel or guest house approved by the Ceylon Tourist Board. If there's a guest house or a hotel approved by the Ceylon Tourist Board, that will be taken as promoting tourism. Then the tax rate would be 14%. Or any restaurant graded by the Ceylon Tourist Board as being in class A or class B. There's a grading system of those restaurants. So those restaurants graded by Ceylon Tourist Board as grade A, class A or class B. Those will be 14%. Any business of travel agent who provides travel management services for domestic travel in Sri Lanka. There will be travel agents who are providing travel management services for domestic travel in Sri Lanka. And then any business of transporting tourists only, not the resident, like locals, transporting tourists only. If the business organization is providing transportation services only for tourists, then again it will be taken as a business undertaking which promotes tourism. Tax rate would be 14%. Any business approved by the Ceylon Tourist Board for providing facilities for recreation or sports. Then again, it will be taken as promotion of tourism. Tax rate is 14%. Okay, and then information technology services. The first one would be software development services. If the business organization is providing software development services, then again IT service providing business. Tax rate would be 14%. Or the provision of information technology services under a business process outsourcing. I'm pretty sure you have heard this BPO companies. So under a BPO company arrangement or a knowledge process outsourcing arrangement, it is called KPO. So BPO or KPO, in those business organizations provide provision of IT services, that will be again taken as information technology service providing companies. Tax rate would be 14%. Okay. Okay, this has been repeated. Okay, so with that, we have covered what are those tax rates applicable as per the old tax rates and as per the new bill. And then we have different classifications. So remember, those classifications will not be there in future. In the sense, from 1st December 2022, only a flat rate, standard tax rate of 30% will be applied. But there will be this 40% rate applicable for betting, gaming, tobacco, and liquor. Okay, now with that, we have uploaded this company taxation question to LMS. Now I hope you will download the question and try to start attempt the question with me. I'll give you time to attempt, because make sure you use this time effectively. As you all know, your in semester exam is also coming. So you have to be familiar with all these questions, not only company taxation, but income taxation as well. So download the question and start attempting. Then I'll give you some time and then we'll discuss. Okay. Let's stop share. Okay, sorry. So this is the question. Hope you can see the screen clearly. Yes. So if I read the question with you, ASL Private Limited is a stationery manufacturing company. Okay. Now be careful. You need to decide the applicable tax rate. Now, first of all, since this is very important, we'll see what is required and the date. Basically, what is the year of assessment? Required, calculate the tax liability of ASL Private Limited for the year of assessment 2021-2022. Now, you don't have to consider the new rates in this question. Why? The year-end date is 31st March 2022. So only the old rates will be applicable into this question. Okay, so remembering by memorizing those questions, those tax rates we discussed, you can select the appropriate tax rate here. What is the appropriate tax rate? This is a stationery manufacturing company. And extracts of its financial statements for year ended 31st March 2022 are given below. The statement of profit or loss for the year ended 31st March 2022. We have been given the profit or loss statement. Now, all figures are in thousands. First one, we have sales. We have cost of sales, and then we have the gross profit here. And other income 2,340. And you can see there are some notes. So if you go to note 1, other income, you can see we have rent, we have dividend income, we have interest income, and we have profit on disposal of lorry. So remember, in this business, in this company, there has been a lorry and it has been disposed, and now we have this accounting profit. So disposal of lorry, profit on disposal of lorry, they have computed and taken as other income. And then we have distribution cost, note number 2. If you can go to note number 2, you can see under distribution expense, we have advertising, we have allowance for doubtful debts, we have vehicle maintenance, depreciation, all are coming under distribution cost. So when you do the question, when you attempt this question, check whether these expenses are allowed or not. You can do the adjustments. And then administration expenses are there. Note number 3. Note number 3, we have salaries and wages, electricity, telephone, EPF, ETF, consultation expenses, depreciation again, and then audit fees. Everything's coming under admin expenses. And then we have finance cost, 800. What is this? Coming under finance cost, we have interest, 800. And then other expenses, that is the note number 5. What is included in other expenses? We have donations. Okay, we have donations. So remember, what are the what is the treatment we need to do when it comes to donation? If you can remember, we have those qualifying payments as well, like donations made to approved charity. So check those slides. If you can't remember, if you can remember, good, you can proceed. If you can't remember, check those slides and get the correct answer. So we have donations 550. Now you can see what can be done with this 550. Can we deduct this 550 fully, or is there an adjustment to be done? And then entertainment expenses, stock write-off, all are coming under other expenses. Okay, so after these expense categories, we have profit before tax, that is 19,474. Okay. Then we have been given this PPE note, property, plant and equipment note. Now I'm pretty sure you all are familiar with these type of notes. Now when it comes to the financial statements, now we are preparing these PPE notes. This is where all the details related to PPE are reported. Now we have columns for each category. We have lands, we have buildings, we have machinery, motor vehicles and furniture. Now when it comes to cost, first of all, we have been given the cost. We have balance as at 1st April 2021. This is the opening day. Now this year of assessment is from first year of assessment is 2021-2022. So the beginning date is 1st April 2021. Ending date is 31st March 2022. So opening balances are there, 10,000, 15, 50, 33, 70, 25. So likewise, we have been given the additions. Additions made during the period, during this year of assessment, additions. So we have machinery, 2,000 and motor vehicle, 10,000 addition. And we have disposals as well. There should be disposals, no? Why? In this other income, we saw this profit on disposal of lorry. So as you can see, a lorry has been disposed. So in that case, there should be disposal coming under motor vehicle. A lorry has been disposed. So the cost of that lorry has been deducted from that column. So disposal 25,000. This is related to the lorry. And then we have the balances as at 31st March 2022. The year-end balances, the cost. And now we have the accumulated depreciation. Again, we have been given the opening balances. Balance as at 1st April 2021, like this. And then we have depreciation during the year, during this year of assessment, during this year, 2021, 2022, depreciation, accounting depreciation, 2,500, 3,400, 8,500, 5,000. But as you all know, since you have learned capital allowances, this accounting depreciation is not allowed when it comes to taxation. So you need to remove this accounting depreciation. And then you need to compute what? You need to compute capital allowances. So you have to remove accounting depreciation and then compute capital allowances and see. Okay, and then disposal. Yes, again, there's disposal value coming here, 7,500. What is this? Accumulated depreciation of the disposed lorry. So the disposed lorry cost is 25,000. Accumulated depreciation is 7,500. And then we have the balance as at 31st March 2022. After that, we have the carrying amount. Cost minus accumulated depreciation. Carrying values are given. Okay, now we are moving to the other information provided. Now in the exam also, you will be getting these type of PP notes, these type of statement of profit or loss, all these notes in addition to the information, additional information given. So probably there will be additional informations more than 6. There will be more additional information for your question at the end of your in the end semester examination. So please be familiar with these information, then it would be easy for you. The first one, all buildings were constructed on 31st March 2017. Now, why we need this construction year? If you can remember, when we were talking about capital allowances, there were 2 tables. If you can remember, Sandhyavansa clearly explained before 1st April 2018, if there are any PPs before 1st April 2018, there are different tax rates. There are different capital allowance rates. The way you compute capital allowance is different. After 1st April 2018, there are different rates. So all buildings were constructed. Now these buildings, all buildings means this 50,000 constructed on 31st March 2017. That is before 2018, 1st April 2018. So you will have to refer to those applicable relevant table. And then all other property, plant and equipment. Apart from buildings, all other property, plant and equipment as at 1st April 2021. All other balances were purchased on 1st April 2019. So those are coming under 1st April 2019. So you have to refer the correct table for capital allowances. And then motor vehicles as at 1st April 2021 consist of a motor car given to the managing director and distribution lorries. So when it comes to motor vehicles, there's a car given to managing director and there are distribution lorries. The cost of the car given to the managing director was 30 million. Now you have to decide why this information, why this detail has been given. What is the adjustment there? So you can decide and try, then we'll discuss. And then on 1st October 2021, a new machine was purchased at 2 million and a lorry was purchased at 10 million. So there are some purchases. We saw them. Machinery, we had this addition, and then motor vehicle, we had this 10,000 addition. It talks here. This is the second detail. Third point, On 31st March 2022, year end, a lorry was sold for 19 million. So this lorry, we already know that a lorry has been disposed. That lorry has been sold at a price of 19 million. The donation represents a cash donation to an approved charity. Okay, now we discussed that as well. We had 550 donation. Now it is a cash donation and it is paid to an approved charity. Now you can see what is the treatment we need to do. And then 1/3 of vehicle maintenance. What is the vehicle maintenance value? We have vehicle maintenance 600, totally 600. So 1/3 of vehicle maintenance relates to the car used by the managing director. Now one car is used by the managing director. So 1/3 of vehicle maintenance is related to that car. And last point we have income tax paid on self-assessment basis. For the year of assessment 2021-2022 was 514,000. Okay, so we have read the whole question. Now it's time for you to answer. So start attempting. Now start answering, start doing these adjustments. Short while I'll also join with you. We'll discuss the question together. Now try to attempt. Okay, so you may have started attempting. Now, one important thing to remember. Now, when you have these kind of questions, you can see this is a company. It is a stationary manufacturing company. Now you have learned when it comes to personal taxation as well, you have learned there are three sources of income. What are those three main sources of income? We have business income and we have investment income. Then we have other income sources when it comes to this company taxation. So when you do this question also, first of all, you need to compute business income and then investment income and then you have other income. Do you have employment income here? No, right? This is a company, you don't have employment income. So you can use those three categories. Now, when you do this question, now I'm using an Excel. When you do also, so make sure you write the name and the relevant year of assessment. And then this is business income. First of all, I'm computing business income. And then I'll be taking investment income. And then I'll be taking other income. So in this question, we don't have any other income, but we have business income and investment income. Okay, now how to get this business income? Basically, what are the income? What is the income, taxable income generated from the business? Now, if you go to the question, we have these sales, cost of sales, gross profit and everything. And we have been given different expense categories, expense items. And we have been given other income as well. Now, you can start computing business income from this profit before tax. Basically, that is the accounting profit. You are taking the accounting profit, the profit calculated by the accountant. You are taking the accounting profit and then you need to have taxable profit. No, you need to calculate taxable profit. So from the accounting profit, you are doing some adjustments. Sometimes you might add different things. Sometimes you might different items. So in that case, by taking accounting profit, you are arriving at the taxable profit by doing adjustments. So this is the approach we are taking here. So I'm writing profit before tax first. This is the one I'm taking. Profit before tax. Now, as you can see, I have taken three columns here. This column is basically to write down if there are any notes, if I'm doing any workings. In order to refer that working, I'm taking this column. So in your exam also, remember, you can do like this. And then for computation purpose, I'm using these two columns. So profit before tax, 19,474. I'm taking the value. And then I might add different things and I might deduct different things. Basically, I'm doing adjustments. I'm doing adjustments to the accounting profit to arrive at the taxable profit. Basically, the taxable profit from business income. Okay. What is the first one? So I'm going with these notes, going this other information. I'm starting with other information. And after completing other information, I'll be going to those one by one expense categories. Okay, now first one, we have these all about buildings, depreciation, and this everything. Now, first of all, with regards to this PPE, we have one accounting treatment to be removed. What is that? Depreciation. Previously also I told you, we need to remove the accounting depreciation. Removing in the sense, we have already deducted depreciation from the profit. We have already deducted. Removing means you are adding it back. So we have to add back accounting depreciation, and then we have to compute capital allowances and then deduct the relevant figure. So my first adjustment is depreciation. Which depreciation? Accounting depreciation. Now I need your answer. What is the total depreciation we need to add back here? I need your answers. So use your chat box. What is the total depreciation I need to take here? You can check the question. We need to take the total depreciation out. Okay, I'm getting answers. Okay, can I have more answers? This is very important. You need to take the correct depreciation. There are some like multiple depreciation figures. Yes. Okay. Can I have more answers? There are 68. Apart from Udeshanta sir and me, there would be 66. Yes, we'll see. Yes. I got only one answer correct. Now here, when it comes to depreciation, you see there are some notes, no? There are some expense notes here. Distribution cost, admin cost, finance cost, other expenses, everything. Yes, I'm getting more answers. So you can see depreciation. Under distribution cost also we have depreciation. Probably this depreciation is related to those distribution vehicles. So we have depreciation 8,100. So some said 8,100. That is incorrect, right? Why? We have depreciation under admin expenses as well. So you need to take that as well if you are taking distribution. So if I take admin expenses related depreciation related to admin expenses, 6,400. So let's see 8,100 plus 6,400. What is the total? 14,500. Do we have any other depreciation value under these expenses? No. But what I say is that answer is also incorrect. 8,100 is also incorrect. 6,400 is also incorrect because it is not the full answer. Now, if you add them together and get 14,500, that is also incorrect. It is not the full answer. Now, I'll show you how to get the correct depreciation value to be removed. Now, if you go to this PPE note, now by looking at this PPE note, can you tell me what is the total depreciation for this period, for this year? What is the total depreciation? By looking at the PPE note. Quickly send me the answers. Yes. As per the PPE note, if you add 2,500, 3,400, 8,500 and then another 5,000, you will be getting 19,400. Very, very good. Thanks for your answers. 19,400. But now you have a problem, right? As per the PPE note, Depreciation total is 19,400. But if you just add 8,100 and 6,400 here, as per the expense notes, you have only 14,500. The values are not matching. Why? What is the reason? Now, these are depreciation related to distribution and admin. No? Now, there can be depreciation included in cost of sales as well with regards to manufacturing overheads. So there can be depreciation in cost of sales figure as well. Now we don't have the cost of sales breakdown. No, we don't know what is the purchase value, what is the production overhead value, anything. We don't have the breakdown. So remember, when it comes to these questions, don't take the depreciation by just adding these two depreciation figures. Take the depreciation from the PPE note. That is where you can get the full correct depreciation. This is incomplete. Why? The depreciation included in the cost of sale is not captured here. So you have to take 19,400. Yes, 19,400. Okay. So hope you got the point there. Depreciation, I'm taking 19,400. We need to add this back because we are removing this depreciation, account in depreciation. Now, if you are removing account in depreciation, then you need to compute what? Capital allowances. Now, this is the capital allowances. Now, this capital allowance, as you can see, we have multiple categories. We have to take capital allowance for buildings, machinery, motor vehicle, furniture. So we need a note. We need a working. So I'm linking working 1. So I'll be taking working 1 here. Make sure you have these workings for your exam as well. Okay, I'll give you few minutes. Try to work this out. Remember, if you can't remember the capital allowance rates, the new table and the old table, you can refer to the slides. Refer to the slides and get the correct answer. Now, if you can give me the capital allowance for separate categories. Now, for lands, we don't get capital allowances. If you can give me the answer for buildings, and then we have machinery, then motor vehicles. After that, we have furniture. Try to get the capital allowance for this period one by one, category wise, and give me the answers. First, get the capital allowance for buildings. If you can't remember the rates applicable, please refer to the capital allowance note, slides. You can refer this slide and get the answer. Buildings capital allowance. Okay. So all buildings were constructed on 31st March 2017. This point is very important to get the capital allowance. Now these buildings, all buildings in the sense we have 50,000. Balance is 50,000. We don't have any additions. only 50,000 opening balance. This has been constructed on 31st March 2017. Now we'll go to this capital allowance sheet. Okay. Now I will refer to this slide. Capital allowance of assets acquired before 1st April 2018 should be claimed based on previous act. What is the previous act table? This is the capital allowance table in previous act. Now these buildings were constructed on 31st March 2017. That means it is before 1st April 2018. Now what is the capital rate, capital allowance rate applicable for buildings? By looking at the table, tell me the answer quickly. What is the applicable rate here when it comes to buildings? Yes, 10%. This is a constructed building. Any qualified building constructed, it is 10%. Now, there are two columns again. This is up to 31st March 2011. This is not the one. From 1st April 2011 to 31st March 2018, we have 10%. Now, this is the column we need to refer because this building has been constructed on 31st March 2017. So this 31st March 2017 goes here, this column. So the applicable tax rate is 10%. Okay. Now what is the cost? We have 50,000. This is 50,000 cost. Now tell me, have we finished claiming capital allowances? Have we finished claiming capital allowances when it comes to 2017? It has been constructed on 31st March 2017. So they have claimed capital allowance for 2016-17, 17-18, 18-19, 19-20, 2021, 2021-22. This year also we can. This is the 6th year. So we can go up to 10 years now. 10% is the rate applicable. Then we can claim capital allowance for this building for this year as well. So how to take this? If I go to the Excel sheet, buildings, we have 50,000. I'll show you how to do this. 50,000 into 10%. We have 5,000. We have capital allowance of 5,000 for buildings. Next one, machinery. Quickly tell me the answer. Machinery. Now, when you take the machinery capital allowance, check the date, check the purchase date, and then refer to the correct table and quickly tell me the answer. What is the capital allowance for machinery? I need answers. As I told you before, you need to use this time very effectively because you can't find time to do this question again. I know your lifestyle, so you won't find time to do this question again. So before the examination, make use of this time during the lecture hours. Then it would be very beneficial for you. And if there are any questions, just ask. Machinery. Yes, I'm getting answers. Now, how to take this machinery? We have 33,000 and we have another addition 2,000. Now, there's a note here. All other property, plant and equipment as at 1st April 2021 were purchased on 1st April 2019. Now, apart from buildings, all other PPE items have been purchased on 1st April 2019. Then, do we have to consider this table for all these other PPE items? Do we have to consider this table? No. This is for assets acquired before 1st April 2018. Now, our assets are purchased on 1st April 2019. So, we don't have to check this table for other PPE items. We can take the new act. As per the new act, you have gone through these tables line by line, so I'm not going to read again. So we have these computer and other things, buildings 20 years, all other 5 years, and then we have intangible assets. So we are talking about machinery here now. As you can see, machinery, we have number of years, 5 years for capital allowances. Now, these PPEs, other buildings other than buildings, all other PPEs were purchased on 1st April 2019 means we have claimed capital allowance for 2019-20 year and then 2021 year, and we are in the 3rd year now. Now in this year we can claim capital allowance by we can go up to 5 years. 5 years capital allowance applicable. So we have finished 2 years. This is the 3rd year. So yes, no problem. We can get capital allowance. Now, not only for this 33,000, for this 2,000 also, the same rate would be applicable, right? 5 years. So how to take the capital allowance? 33,000 plus 2,000. We can take the full value. 33,000 plus 2,000. This is 35,000. 35,000 divided by how many years? Divided by 5 years. If you divide it by 5 years, then you can get capital allowance for 1 year, this year. Answer is 7,000. Your answers are correct. 7,000. Very good. Now, motor vehicle. When you do capital allowance for motor vehicle, be careful. I need answers for this. Motor vehicle. Be careful when you take the motor vehicle capital allowance. Can I have the answers quickly? Yes, I'm getting answers. Others also, please try. Okay, now I have a question. A new addition was made on 2021, 1st October. Okay, I think you are talking about why don't we take this proportional capital allowance? No, if you acquire a PPE item, you give capital allowance fully for the acquisition period. Am I correct, Udeshant sir?
Yes, that is the way. Now, for accounting, when we apply the accounting standards, we sometimes do the depreciation. We calculate it on proportionate basis. But for the sake of simplicity, as for the taxation practice, we do not compute the capital allowances on proportionate basis. But even if that is for a single day, we take the depreciation, tax depreciation for the whole year.
And so when you dispose an asset, we
Yes.
don't take capital allowance for the full year, right?
Yes. In the year of acquisition, fully allowances are claimed. In the year of disposal, nothing is claimed.
Okay. Hope you are very clear. Yes. So can I have the answers? Now I'm asking for capital allowance of motor vehicles. Okay. We'll try this out. Yes. Yes, I'm getting answers. Okay, we'll see these whether these are correct. Huh? Motor vehicles. Now, when it comes to motor vehicles, now we don't have a problem. Those were purchased on 1st April 2019. All these motor vehicles. That means this 70,000. Opening balance 70,000 motor vehicle. Okay. So this 7 will see as per the new act, as per the new capital allowance rates, what is the applicable number of years. Now for motor vehicle also, we can get 5 years. Only for buildings and intangible assets, the rate would be, number of years would be different. 5 years, we can claim for 5 years for motor vehicles. Okay, keeping that in your mind, now if you take this 70,000, there's one adjustment to be done. You can't claim capital allowance for whole 70,000 here. Why? What is the first adjustment? Look at this. Motor vehicle asset 1st April 2021. That means this 70,000 consists of a motor car given to managing director and distribution lorries. The cost of the car given to the managing director was 30 million. So can you claim capital allowance for this car given to managing director? No, you can't claim capital allowance for this car. So in that case, you can't claim capital allowance for 70,000 total. You will have to remove this 30,000 first. So how to do that? 70,000. If I just take 70,000, you have to remove 30,000 first. Not only that, that is the first adjustment you have to do. Not only that, you need to remove, if you can remember, a lorry has been disposed. There was a profit as well, profit on disposal. So when you dispose this, as Udeshanta sir mentioned now, when it, at the on the disposal year, you can't claim capital allowance. So this 25,000 worth of lorry has been disposed. That means you can't claim capital allowance for this 25,000. So in that case, you have to remove this 25,000 as well. I'm removing this 25,000 as well. Hope you are clear with those two adjustments. One thing is removing the car used by the managing director, no capital allowance. The other one is the disposed lorry. Since this is the disposal year, you can't claim capital allowance, 25,000. Apart from that, apart from this balance 70,000 balance, then you have this addition 10,000. As explained in the acquisition year, you can't claim capital allowance for the full year. Now this has been purchased. This has been purchased on 1st October 2021. Even though it has been purchased on 1st October 2021, you can't claim capital allowance for the full year. So you can add 10,000 or so to this. 10,000, that is for the addition motor vehicle. Now this is the total value you need to consider when you take capital allowances. Okay. So what is the number of year applicable? 5 years. Now let's see. 70,000 minus 30,000 minus 25,000 plus 10,000 divided by 5. You have 5,000. Now, unfortunately, I didn't get any correct answer. I hope you all are clear now. 30,000 is for this MD used car, 25,000 is for the disposed car, and then 10,000 we added as per the addition. Now we can claim 5,000 for motor vehicles. So this is the correct answer. Okay, now furniture is easy. When you take furniture, 25,000, no additions or disposals, 25,000. As per the new table, you can see, you can easily get number of years is 5. This furniture fixtures, 5 years. So 25,000, how to take this? 25,000 divided by 5. That is another 5,000. Okay, so altogether, what about the total capital allowance? 22,000. This is the 22,000 total capital allowance we can claim. So you added accounting depreciation back and then you deduct the correct capital allowance, 22,000. Hope you all are okay now. So with that, we have completed the first note. This is okay. And the second one is also okay. Now, this one. This lorry has been disposed. Accounting profit we have gain on gain on disposal of lorry. Here, profit on disposal of lorry. We have computed it as 1,500. Now, if you can remember, Sandharivansa explained, when you dispose these assets, yes, accountant is computing profit on disposal of lorry. But when it comes to taxation purpose, you need to compute balancing allowance. Balancing allowance. So as per the balancing allowance, we need to check whether it is a profit or a loss. So first of all, similar to what we did for depreciation, we removed the depreciation effect now. Likewise, now we have this profit on disposal of lorry 1,500 added under other income. First of all, remove this profit. So you are removing this first of all. How to remove? You come here. What is that value? 1,500. Profit on disposal of lorry. You are removing that first of all, 1,500. Now we need working 2 here. Working 2 is for, now this is for capital allowance now. Balancing allowance. Compute balancing allowance quickly and tell me the answer. What is the profit we can, profit or loss we can consider for this disposal of lorry? We have removed the accounting profit, 1,500. We have removed. How to take this? Okay, so when you take the balancing allowance, I didn't get any answers. You may send me the answers. First of all, you need to get the sales proceeds. Sales proceeds of the lorry. Now you have disposed this lorry and you have a profit as well. You have a profit have in the sense, having a profit means you have sales proceeds. You have sold this. Now, if you can go to notes here, on 31st March 2022, a lorry was sold for 19 million. Now, this is the sales proceed value. 19 million. 19 million in the sense 19,000 sales proceeds. Now, when you compute profit on the disposal of lorry, profit on the disposal of lorry, as per the accountant, what do? You take the carrying value and then you match it with the sales proceed, and the difference you recognize as the profit or the loss. This is what you do. The same thing is done in taxation as well. So first of all, you need to take the cost of the lorry. What is the cost of the lorry? Can you please tell me? What is the cost of the lorry? I want you to get these values correctly, then only you can remember. This is like the depreciation. If I just write the depreciation value here, you will just write it and you will not remember how to take this. So tell me the cost of the lorry. This is easy. What is the cost of the lorry disposed? Yes, cost of the lorry disposed is 25,000. 25,000 is the answer. Yes. So 25,000. Now, if I am the accountant, if I have to compute the profit on the disposal of lorry, then what do? I take the cost and then I take the accumulated depreciation. Accumulated depreciation. Now here, what you have to do is you are taking the tax purpose, no? Then you have to deduct from the cost accumulated capital allowance. Accumulated capital allowance. Take this value. What is the accumulated capital allowance? Cost is 25,000. How much is the accumulated capital allowance? Now this lorry has been purchased. There's a common date, 1st April 2019. Remember that. 1st April 2019. For how many years they have claimed capital allowance? You need to compute that. For how many years they have claimed capital allowance? Quickly send me the answers. For how many years they have claimed capital allowance? Remember, disposal year doesn't have capital allowance. We can't claim capital allowance for the disposal year. So for how many years? Years. 2 years. Very good. How you take this? This has been purchased on 1st April 2019 means the whole acquisition year can claim capital allowance. 2019, 2020. You can claim capital allowance. Not only that, 2020, 2021. Can you claim capital allowance for 2021, 2022? No. No capital allowance. Why? This is the disposal year. So for 2 years, you have claimed capital allowance. Okay, so for 2 years, what is the cost? 25,000. What is the number of years we can claim for capital allowance? 5 years. Then 25,000 divided by 5 into 2. For 2 years, we have claimed capital allowance. That is 10,000. So this is the accumulated capital allowance. For 2 years, we have claimed capital allowance. Then you are taking 10,000 here. Okay. Now, in accounting, we tell carrying value. For taxation, we call it tax written down value. This is similar to carrying value. Then how much is the carrying value? How much is the tax written down value? This is 15,000. Now what has happened is 15,000 worth of lorry has been disposed with a sale proceeding of 19,000. Do we have a gain or a loss? We have a gain. 15,000 value lorry has been disposed to 19,000. Difference is 4,000. This is a gain. This is a gain. Okay, now we have removed the gain or profit computed by the accountant, 1,500, and now we are adding balancing allowance. What is the balancing allowance? It is a gain. Then you add this. How much? 4,000. This is how you do this. 4,000. Okay, hope you are clear with that. Next one. Now we are done with all these entries, all these information. Now we have the donation represents a cash donation to an approved charity. Okay. Now whatever the donation, first of all, what you have to do is removing this donation. Removing in the sense, this donation figure 550. Since this is for since this is for an approved charity, we can consider this for qualifying payments as well. So we'll discuss that later. For now, donation expenses you are removing. You are adding this back. Donation fully. Donation. That is 550. Next one. 1/3 of vehicle maintenance relates to the car used by the managing director. So for car used by the managing director, we didn't allow capital allowance as well. So for this vehicle maintenance also, we can't deduct. It is not allowed to deduct. So what is the total of vehicle maintenance? We have 600. So 1/3 of 600 means 200. So this 200 vehicle maintenance is not allowed to deduct. So what that means is balance 400,000 you can deduct, no problem, but 200,000 not allowed. Not allowed in the sense you need to add back. 1/3 of vehicle maintenance, 600,000 into 1/3. So 200. 600, 1/3 of 600 means 200. Okay. This is also adjusted. So when you do the question, if you do any adjustment, make sure you mark that. Then only you can see what you can understand what is done and what is not done. This is okay, done. This is not fully done. Donation we have to do for qualifying payments. This 1/3 of vehicle maintenance completed. And then we have this income tax paid on self-assessment, 514. So as a tax credit, you can get this deducted when you compute tax, income tax payable. We'll keep it for a moment. Okay, now we'll go to now we are somewhat okay with the other information. Now we are going to these one by one line items. Okay. Now, first one, note 1, other income. You are checking one by one now. Now, we are computing business income. No, we are computing business income. These rent income, dividend income, interest income, all these can be categorized as investment income. So, can we keep these investment income figures in business income? No. First of all, you need to remove these investment income figures from the business income computation. So what to do? You deduct these investment income figures. You have rent, you have dividend, you have interest. What are the values? 540. We have 160 and then we have 140. Those are added. Those are deducted. Removing those investment income. And then profit on disposal of lorry, already we have adjusted 1500, we adjusted. And then advertising, okay, allowed. This one, allowance for doubtful debts. Allowance for doubtful debts, not allowed. Not allowed to deduct. Only the bad debt can be deducted. So in that case, what to do? Not allowed in the sense you need to add back. So allowance for doubtful debts, you are adding it. How much? 140. This is added. These are okay. And then depreciation, yes, we have completed. Salaries and wages allowed. Electricity, telephone, EPF, ETF, consultation allowed. Depreciation we considered. Audit fee allowed. Interest okay. Entertainment expenses. Entertainment expenses not allowed. Okay. Not allowed in the sense you need to add it back. Entertainment expenses 540. You added it back. And then stock write-off, everything allowed. Okay, let me check whether we have any other expenses to be deducted. Okay, now after writing all these additions and deductions, what you can do is take the totals into the next column. 24,830. If there are any differences, just let me know. Total deduction would be 24,340. Okay. So with that, you can write this as business income. Business income. How much is the business income? You have this profit before tax 19,474. You add this 24,830. You deduct 24,340. You have 19,964 business income. This is the first one. Okay. Business income. Now I'm taking what? Now I'm taking the second one, second category. Second category is investment income. We are done with business income. I'm taking investment income. What are the things included in this investment income? We have all these three: rent income, dividend income, and interest income. So I'm taking them: rent income, dividend, and interest income, and taking 540, same values, 540, 160, and 140. The total is 840. This is the total of investment income, 840. You can write it as investment income here. You want as investment income. Okay, now here, now you know what is included in the question. You don't have any other income to be included here. In that case, you can start computing the income tax payable. Okay, so the first phase we have, first category we have business income, and then we have investment income. How to do this? First of all, you are taking the business income total. This is how you do this. First of all, you are taking business income. What is the total? Business income includes 19,964. Yes, you are taking this business income figure like this. Second one, second category, investment income. Investment income figure is 840. 840. Do you have other income? No, but I can show you that we don't have any other income. Then what I do, I take the total. This total means what? This total, you call it assessable income. The total of all three: business income, investment income, other income, you call it assessable income. Now, by taking this assessable income, before you compute income taxation, income tax payable, you have to do one adjustment. What is that adjustment? Qualifying payments. You need to see whether there are any qualifying payments. Now, as you already know, we have one qualifying payment in this question. What is that? We had this donation paid to approved charity. Now, the cash donations to approved charity allowed. How to take the computation? If you can't remember, just check the slide. Here it says how to compute. Now, tell me, I'm not telling you the answer. Now I need the answer. What is the amount we can deduct as donation paid to approved charity with reference to this table? As a qualifying payment, what is the amount we can deduct? Quickly tell me the answer. Now I have showed you the table as well. By referring to this table, you can compute. What is the amount we need to take as the qualifying payment with regards to donations? Okay. Now you know this one. So I explain you very well. Yeah. Yes, I'm getting answers. Yes. Very good. Yes. Yes. Okay. So what should be written here first of all? Now, when it comes to qualifying payments, this is a cash payment for a approved charity. Then who has paid? Who has paid? We are not talking about individual. We are talking about company taxation. So we have to check this column, entity column, not individual, but entity. And what is the box, relevant box? So this talks about approved charities, monetary donation. And this talks about government or prescribed institutions in money or otherwise. Now, in this case, we have a cash donation for an approved charity. So this is the box we need to check, this area. Okay. So we have to take, first of all, we have to take 1/6 of the assessable income. When you compute this, take 1/6 of the assessable income, AI. What is that? You have assessable income 20,804. Divided by 6, you have 3,467 approximately. 3,467. And it says 500,000. Lower level is 500,000. 500. You have to take the lower value of, lower of 1/6 is 1/6 of assessable income and 500,000. Now what is that? Lower value is 500. Lower value is 500. Even though you have actual how much? Actual donation is 550. But the maximum level we can claim is 500. Okay, so you can deduct 500 as the qualifying payment. In that case, what is the taxable income? What is the taxable income? You have 20,304. This is the taxable income for this company. Hope you all are clear. Now we are moving to income tax computation, like tax liability computation part. Last part. Okay. Now, one important thing here. When you compute tax liability, now if you can see here, we have both business income and investment income. Now, when you take the tax computation, when you take the tax liability, you have to apply relevant tax rates for business income as well as for investment income. Investment income we have to take separately and apply. Okay. Now, first of all, before going in, tell me what is the applicable tax rate for business income? Now, this is a stationery manufacturing company. If I'm correct, this is a stationery manufacturing company. Now, we discussed the applicable tax rates previously. I told you the standard one is 24%. Then we have specific business entities 14%. It includes SMEs and other agriculture, industry, education, health service providing companies. And then I told you manufacturing entities applicable tax rate is 18%. Now tell me what is the applicable tax rate for this question. First of all, tell me that question. Hurry up. Okay. Okay, I'm getting different answers. So that means there's a confusion. Yes, there should be a confusion. Now, if I take this as a manufacturing entity, tax rate applicable for manufacturing entity is 18%. But if I take this business organization as an SME, what happens? If I take this as an SME, provided that this business doesn't have an associate and this business is conducted in Sri Lanka, within Sri Lanka, what would be the tax rate? I can take this as an SME. Why? The total gross turnover is 52 million. This is less than 55 million. If I take this as an SME, what happens? What would be the tax rate? Yes, it is 14%. If it is an SME, 14%. If it is a manufacturing entity, 18%. Now, in that case, even though this is a manufacturing company, this can be classified as an SME as well. By looking at the sales figure, yes, you can. Assuming that this doesn't have any associate or this conducts in Sri Lanka, assuming those two conditions. So in that case, the lower tax rate would be 14%. We will apply 14% here. Okay, if you have any questions, just ask. 14% would be the applicable tax rate. Okay. Now, this one would be taxed at 14%, your business income. This is for businesses now. But for investment income, I'm telling you, we have to take separate tax rates. How to take this? So I'm taking this investment income item separately here. We have rent, dividend, and interest. What are the figures? 540. These are the figures. This rent income, 540, we will have to tax at the normal or standard tax rate, standard company tax rate. You can't apply this concessionary tax rate for this rent income as well. This concessionary tax rate is for those specific business entities, specific businesses. This rent is not a part of the business income, no. So you have to take 24%. If you can remember, previous standard tax rate is 24%. You have to take 24% there. Now, if I do this dividend income, if you can remember, when I was discussing the lesson, dividend received from a resident company, that will be taxed at a rate of 14%. Now, what would be the tax rate here for dividend? That would be 14%. Again, interest. Interest, it will be again taxed at the rate of the normal standard company tax rate, not any concessionary tax rates. That will be 24%. Hope you all are clear. Rent, normal tax rate 24, interest, normal tax rate. But for dividend, we have been given the tax rate to be used. That is 14%. Then what? Let's compute. 540 into 24, and then 106 into 14, that is 22, and then 33. Approximate figures you can take. So if I round them off, 130, 22, and 34. These are the values. Then what about the balance? Now we have taken investment income. Then we have to take the balance. What is the balance? 19,000. Give me a second. Balance. What is the balance tax rate? We have to take, after discussing, we have to take 14%. That is the normal tax rate we are using. 14%. Considering this is a SME, even though this is a manufacturing company, this will be a SME. So this will be, balance would be this one. Take the figure and tell me the answer. Business income. $2,795. This one, approximately. After rounding this off. Yes, correct. So as per rent income, dividend income, interest income, after applying the relevant tax rate, these are the income tax payable. For balance, that means the business income, after applying the relevant tax rate, this would be the income tax payable. What is the total? Total would be 2,981. Yes. Now, after taking this, you have one adjustment to done. What is that last adjustment? This one. Income tax paid on self-assessment basis for year of assessment 2021-2020 is 540. The company has already paid. Okay. 540. You need to deduct tax credit. You can write it as self-assessment payment. That is 514. Yes, no? 514. Then you have, this is a tax credit, you can deduct. Then you have the balance tax payable like this. Balance tax payable. Okay, Lamai. Thank you very much. There's a small issue here. Now, when I take the income tax rates for rent, dividend, interest, I took 24%, 14 and 24, separate applicable tax rate. Then I told you we have to take the balance taxable income. How much is the balance taxable income? Now, the total taxable income is 20,304. After deducting this qualifying payment, 500. Then the balance would be, you take 20,304 minus, for these 540, 160 and 140, we already deducted, we already computed tax. So you are deducting this. The balance would be taken like this. Yes. Now this should be correct. Thank you. Who's that? 19533. Yes, exactly. So you are taking the balance like this. You are taking the taxable income, total taxable income. Then you deduct this investment income 840 because you applied separate tax rates for those investment income. And then you take the balance. For balance, you are applying 14%. Not for this business income fully because we have to deduct this 500 qualifying payment. Very good point. Thank you. Okay, so after that, you are deducting the tax credit and get the balance tax payable as 2,397. Hope you also get the same answer. Okay, so with that, we have completed the whole question. And yes, we have exceeded the time by 2 minutes as well. Hope you're okay with that. Okay, so practice more and more questions. Try to do past papers. Sandurvan sir will do more questions in future. Okay, give me a second. So with that, we'll conclude the today's session. And I got few questions. What is coming under other income? So other income අපිට ගන්න පුළුවන් ළමයි අපි මොනවා හරි company එකේ මොනවා හරි විකුණනවා නම් කැඩිච්ච බිඳිච්ච දේවල් විකුණනවා නම් පත්තර විකුණනවා නම් ඔය වගේ දේවල් other income. So those are coming under other income. ඒ ප්‍රශ්නේ. Okay, can you show the Excel again? Okay, sure. Yes. No problem. Hope you all are okay now. Uday sir, do we have anything to mention before we wind up?
In this other income, in a practical situation, what and what things are there in the other income? In a practical situation, a company will say, now here for an examination situation, we have not taken those information in detail. But whatever the other income, all the other incomes are taxed. All the other income are taxed. When other income are taxed, you'll have to see ළමයි බලන්න ඕනේ other income ඇතුලේ property plant and items වල disposal වල accounting income වගේව තියෙනවද කියන එක තමයි tax වල interest එක අපේ. එහෙම තියෙනවා නම් other income ඇතුලේ තියෙනවා නම් property plant and equipment ඇතුලේ ඒවට අදාළ income තියෙනවා නම් ඒව adjust කරලා ඒව නැවත reverse back කරලා tax income එකක් හරි tax loss එකක් හරි තියෙනවා නම් ඒක adjust කරන්න ඕනේ. ඒක එතන විතරක් නෙමෙයි දැන් අද expense එකලෙත් තියෙන්න පුළුවන් සමහර විට property plant and items dispose කරපුවාම එන accounting loss එක. එහෙම වුණා නම් ඒකත් reverse කරන්න ඕනේ. accounting එක reverse කරලා tax අපි බලනවා profit the loss දෙන්නේ කියලා item එකට ඒක reverse කරන්න ඕනේ. අද income සහ අද expense වල ওই දෙකම තියෙන්න පුළුවන්.
එතකොට සර් applicable tax rate එක කොහොමද වෙන්නේ?
tax rate එක ඒව property plant and ඒව ඔක්කොම business නේ. සාමාන්‍ය සමාගමේ ඒවා අදාළ tax rate එක කියන්නේ.
හරි.
ඒ කියන්නේ දැන් මෙතන නම් මෙතන අපි tax කරන්නේ 14%.
Yes.
ඒක මොකද ඉන්වෙස්ට්මන්ට් නෙමෙයි මම මේ කියන්නේ ප්‍රොපර්ටි ප්ලාන්ට් එක නිකන් දේපල පිරියද උපකරණ විකුණනකොට මොන හරි ලොරියක් කියලා හිතන්නකෝ. ඒකේ ලාභය අලාභය තියෙන්නේ අද ඉන්කම් වල වෙන්න පුළුවන්. සමහරට අද එක්ස්පෙන්ස් වල වෙන්නත් පුළුවන්. දැන් අපිට එක්සැමිනේෂන් පර්පස් වල නම් ඕක අපිට කියන්න ඕනේ. නැත්නම් ඒක ලියලා තියෙන්න ඕනේ. disposal profit හරි accounting profit on disposal of හරි accounting loss කියලා ඒක තියෙන්න පුළුවන් තැන් දෙකයි. එක්ක අද ඉන්කම් වල අද එක්ස්පෙන්සස් වල තියෙන්න පුළුවන්. එහෙම නැත්නම් සමහර අවස්ථාවල අපි හිතමු ඩිස්ට්‍රිබියුෂන් ලොරි එකකට නම් අදාළ ඩිස්ට්‍රිබියුෂන් එක්ස්පෙන්ස් ඇතුලේ තියෙන්න පුළුවන් මේ එක්සැමිනේෂන් පර්පස් වලට තමයි එහෙම වෙන්න පුළුවන්. ප්‍රැක්ටිකලි නම් අපි ඕව දන්නවනේ කම්පැනි එක වැඩ කරනකොට ටැක්ස් අපි කරනවා නම් අපි ඕව දැනගෙන හොයාගෙන බලන්න ඕනේ. PP items acquire කරලා තියෙනවා, dispose කරලා තියෙනවා. ඒ ඔක්කොම විස්තර දැනගෙන තමයි අපිට ෂෙඩියුල් එකක් හදන්නේ අපි. ඊළඟට තව ප්‍රශ්නයක් තිබ්බා මේ බිල්ඩින්ග්ස් වල වගේ යූස්ෆුල් ලයිෆ් දීලා තිබ්බොත් කොහොමද ටැක්ස් depreciation allowance provide කරන්න කියලා. බිල්ඩින්ග්ස් සාමාන්‍යයෙන් බිල්ඩින්ග්ස් වලට අපි බිල්ඩින්ග් සාමාන්‍යයෙන් දෙන්නේ නැහැ ෆයිනෑන්ස් ලීස්. ප්‍රැක්ටිකලි දෙන්නේ නැහැ. මොකද බිල්ඩින් එකක් ෆයිනෑන්ස් ලීස් දෙනවා කියන්නේ ටික දවසකට පස්සේ ඕනර්ෂිප් එක මාරු කරනවා කියන එකනේ. එහෙමනම් ලොකු කාලයකට වගේ දෙන්න පුළුවන්. ලොකු කාලයකට, පුංචි කාලයකට නෙමෙයි. එහෙම ලොකු කාලයකට දුන්නොත් අවුරුදු 20කට එහා ගියොත් මෙතන ප්‍රශ්නයක් ඇති වෙන්නේ කොහොමද බිල්ඩින් ඩිප්‍රීෂিয়েට් කරන්නේ 105 ගන්න. දැන් තියෙන ලෝ එක හැටියට. එහෙම නැත්නම් ඔපරේටිව් ලීස් එකකට ගියොත් ඔපරේටිව් ලීස් එකක් නම් අරගෙන තියෙන්නේ අපිට කැපිටල් අලවන්සස් අඩු කරන්න දෙන්නේ නැහැනේ කොහොමද? රෙන්ට් අලවන්ස් එක තමයි අඩු කරන්න දෙන්නේ. අපි මං හිතන්නේ අපි ඊළඟට කරන්න ඉන්න ගානේ ඔය ලීස් අලවන්සස් එහෙමක් තියෙනවා. ඒ ගැන අපි ඊළඟට මේ පන්ති අපි සාකච්ඡා කරන ගානටත් ජොයින් වෙලා මේවා වර්ක් අවුට් කරන්න. නතාෂා මැඩම්ට සඳරුවන් සහරේ වර්ක් අවුට් කරයි. අපි ලීසින් අලවන්ස් මම හිතන්නේ පන්ති සාකච්ඡා කරුවා ඉලස්ට්‍රේෂන්ස් එකක් දෙකක්. ඒ ගැන අවධානයෙන් ඉන්න.
Hari. Thank you, sir. Hari. Hope you all are okay with the question and the answer. So let's call it a day today. Thank you very much. Good night.